Hello, I'm Ricky Lee, and today on the watch list, I'm joined once again by Ben Kohn, CEO, President, and Director of Playboy Inc. The company has reported preliminary unaudited fourth quarter results showing healthy growth and a transition to adjusted EBITDA profitability, a notable milestone as Playboy continues executing its asset-light strategy. Ben, welcome back to the watch list.
Thanks for having me, Ricky.
So, Ben, congratulations firstly on the preliminary Q4 results, including roughly $7 million in adjusted EBITDA. So, what were the key drivers behind this meaningful improvement in profitability?
Yeah, Ricky, I think it's really the strategy that we embarked on almost 2 years ago. And I think you've seen now for 6 consecutive quarters growing EBITDA and growing profitability for the business. The business really fired on all cylinders. Honey Birdette performed extremely well. In the fourth quarter, we saw sales up considerably. Our licensing business, the foundation, the cash cow of the company, continued to perform very well. And you couple that with the reduced overhead because of our asset light strategy, almost $7 million of adjusted EBITDA, and that included $900,000 of litigation expenses, which are really one-time in nature. And so without that, we would have been close to $8 million of adjusted EBITDA. And then our net income, in our mind, was burdened by almost $1.2 million of transaction expenses related to the China deal that we've previously talked about. Still working on the tax provision. So, without those transaction expenses, we would have had positive or maybe even more positive net income than we're reporting. So very happy with the business overall. Business is sort of firing on all cylinders. And it really speaks to the asset light strategy that we started working on 2 years ago.
Well, sounds like great news. And then, so hoping it will continue looking ahead, particularly following your China licensing transaction that you just mentioned with UTG. What catalyst should investors be watching for in the coming quarters?
Look, I think that as we move into 2026, we're really focused on rebuilding the brand. And so we're making a significant investment in content. You're starting to see that through our social media feeds. You'll start to see more of that as the year progresses through both video series as well as podcasts. And that really speaks to the brand relevancy. We're very excited about the next issue of the magazine that will be coming out towards the end of March. We have a major music celebrity on the cover. And the earned media value of that for the brand is tremendous, right? And so I think really as we move through 26, it's the relaunching of the content and then the continued financial performance of the business. And the China deal that we previously talked about, all of those things are building blocks to help increase the profitability over time of the business.
Wow, great stuff. Thank you so much for your time today, Ben.
Thank you, Ricky. I appreciate it.
Once more, that is Ben Kohn, CEO and President of Playboy Inc. For more on the company's financial performance and strategic initiatives, visit investors.playboy.com. That's all for this episode of The Watchlist. I'm Ricky Lee. Make good choices today.